Good afternoon, everybody. This is Alexandria and Angie with Navigate HCR. We appreciate you joining us today for our twice weekly webinar update on COVID-19 compliance and business and HR concerns. So we're going to go through a few things today, and hopefully you guys all find it valuable. If you've been on our presentations in the past, please make sure that you type your questions into the chat box, and we'll be addressing those as they come up or at the end at the very least. We do have some new and exciting information for you guys all here at the end, and additional ways for us to share some more information with you. And we are excited to be able to share all this with you guys, and hopefully if you have any questions, please feel free to reach out to either myself or Angie. Angie, you want to go to the next one? And I think from here, I'm just going to go ahead and introduce Angie, who is our compliance guru and all of the things. She is, of course, has been a broker and consultant and a speaker and educator, and is very passionate about compliance and helping employers navigate through this crazy time above all else. So I'm going to turn it over to Angie, and I'll look for your guys' questions. Here we go.
Awesome. Thank you, Alex. Welcome, everybody, to, gosh, I think this is our 5th edition, our 5th presentation, and the guidance and the information just keeps coming and coming, and as long as there are new things to report, we will certainly do so. Alex and I have been working diligently on some new white papers that we will be posting shortly, so as always, keep up on our social media. You'll generally get things much quicker there than anywhere else. So I wanted to start off today's presentation addressing our public school friends out there. There has been a lot of questions around schools that obviously have to comply with the Families First new bill that was passed, or what was it, the 18th, I believe. And the question was around the tax credits. You know, schools are considered part of, you know, a government entity. So there was definitely some question around, well, how do they recoup the cost of the paid sick leave and the FMLA expansion? So I used my Phone a Friend resources to get you guys some valuable information. And this is what I received from our friends at PASBO, which is the Pennsylvania Association of School Board Officials. I reached out to PASBO because I am in Pennsylvania and know some folks around this area, but certainly you can contact your own local ASBO branch. Pretty sure every state has a branch that you can reach out for any questions that you may have. And this is the guidance they provided us, again, in regard to the Families First tax credits that would normally go back to a business to offset the costs of them paying for the employees' emergency sick leave and FMLA expansion. So the guidance is schools are technically a political subdivision of the state. Generally, no public employers can claim the tax credit against the employer's share of FICA highlighted from the Act. Private employers required to provide leave are entitled to the tax credit. So based on how schools operate, and they are at least partially funded by state government, I'm not super familiar with how all that funding works, but it sounds like the typical tax credit listed in the Families First Act is not necessarily going to apply to public schools. So if you've not attended any of your state or local ASBO, I'm sure they're doing webinars and things like that, certainly reach out to them, and perhaps they can give you far more detailed guidance. But I did want to bring that up first and foremost, because we have had lots of questions, and it's definitely been a little bit vague in the information. So I hope that helps clear up that question on tax credits for public schools. So over the weekend or Friday, late Friday, the stimulus package was passed by both the House and the Senate. It was signed off by the president. I found it interesting that both the House and the Senate had prepared their own stimulus package, and what they ended up compromising on and passing is a completely separate bill, which is H.R. 748, and it is called the CARES Act. What the CARES Act contains are the following pieces. So if you remember from the Families First new legislation, there were multiple divisions, which just breaks out the variations within. The stimulus package only has two divisions. Division A, keeping workers paid and employed, healthcare system enhancements, and economic stabilization. Under that, we have 6 titles, and then Division B would be emergency appropriations for coronavirus health response and agency operations. Now, this ended up being about, 335 pages when I converted the text of the bill to PDF, and I have spent quite a bit of time digging through this. Much more is still out there to really dive into, but what I wanted to focus on today were some of the key areas for what business owners, HR folks, things that would be of most interest to you. So we're going to unpack some of those pieces now. So under Division A, Title I, Keeping American Workers Paid and Employed Act. So obviously, if you watch the daily live newscasts of the president and the coronavirus task force, like I do, as well as all of the different information that's out there, we know that the government is really focused, and the whole cause behind the stimulus packages, how can we keep workers working? And in order to do that, based on everything going on, how can we help employers afford to continue to pay their workforce when obviously coronavirus has had an extremely large economic impact to the United States? So I thought Title I of Division A was a great one to lead with. And what that is doing is it's amending the Small Business Act to create some new business loan programs. This business loan program is going to run from February 15th to June 30th. These types of loans are 100% federally backed, eligible to businesses to help pay for these operational costs like payroll, your rent or mortgage, your health insurance benefits, insurance premiums, utilities, and all the day-to-day expenses that you have for a business. These loans can be forgivable under certain conditions. No collateral or personal guarantee is required, and the interest rates are not to exceed 4%. So whether they are, whether you fall into one of the certain conditions where it can be forgiven, at least partially, or not, the interest rate is designed to be a very low rate, which is great. Loans made under the SBA's disaster loan program on or after January 31st may be refinanced as part of this new program. So if you were already experiencing fallback from coronavirus prior or from January 31st to current, before this legislation was officially passed, this piece of it allows you to go back and look at doing a refinance of that disaster loan so that it then will give you the perks of the new legislation. The administrator should issue guidance on prioritization. So those administering these loans the government's goal was to prioritize small business concerns. I know that when it comes to small business, you don't necessarily have the funds saved up for, supporting your business for a month or even a couple weeks, if there is no income coming into your business. So they wanted to prioritize small businesses. Entities that are in underserved and rural markets, small business concerns owned by socially and economically disadvantaged individuals, women-owned businesses, and businesses in operation for less than 2 years. So this is kind of how they're prioritizing getting these loans out. Obviously, very similar to the Families First original legislation is under 500 employees. So although we're looking at entities with under 500 employees, there are some special rules for businesses in hospitality and dining industries. So what they have done as a bit of a special rule is when there are multiple locations for your business, so you have multiple restaurants or multiple hotels, they're looking at under 500 per location in this instance. So that's kind of interesting because the Families First Act specifically called out how to calculate your size and had some verbiage in there regarding joint owners and commonly owned businesses. So this is interesting. They did call out the NAIC code for accommodation and food services. So that's something to watch based on those of you out there listening who are in the hospitality or food service business. The cap is $10 million for a loan, and forgiveness amounts will be reduced for employee cuts or wage reductions. Now, I know it took a while to get this passed, although in the grand scheme of things, the way they put this together and passed it was actually done in record time, but it didn't, it didn't stop what we're all going through with, our businesses and the struggles that we're all having, because essentially the majority of the population is kind of in lockdown and not all industries can continue to operate or make money, get income in. So for those that have had no choice but to already lay off employees or reduce wages, things like that, part of the forgiveness parameters will be affected by that. So let's take a quick look at, still under Division A, let's take a look at Title II, which is Assistance for American Workers, Families, and Businesses, and this is Subtitle A, Unemployment Insurance Provisions. Excited to see that the government was kind of on point for unemployment compensation to self-employed individuals, the gig economy. I can't remember the recent statistics I've seen, but in all of the various talks and whatnot between our legislators, the gig economy, which are those people that work on a gig basis. So they do a gig. And when I think of the word gig, I think of a musician. They're having a gig, but it really is far more encompassing than that. It's people that are doing items on a per item basis. So perhaps they're a freelancer, different things like that. But the point is, these are folks that are self-employed. They're running their own business. They may be a business of one. The funding for unemployment for these folks is really a great piece of legislation, so that for once, self-employed folks out there can get some unemployment compensation, because obviously there are a lot of types of self-employed individuals who can't get any work right now. Now, certainly, even though this is giving federal funding, you all will need to look on your state unemployment compensation websites to see what the rules are by state. You know, the government wants the state to essentially adopt some of these rules with, yes, we're going to provide unemployment to self-employed individuals or gig workers. We want them to remove the waiting week, and you know, we want them to do the additional $600 per week. So this would be on top of the unemployment compensation you would receive if you were a traditional employee who was out of work. This is actually additional money. Now, the additional 600 isn't just for self-employed. This is part of the stimulus package that even traditional employees who have been laid off, you know, lost their job, whatever, because maybe their business can't even be open right now and they have no ability to telecommute or telework. The federal government is going to back the expense by the states and the employers who are paying into to unemployment compensation to give an additional $600. So the government is looking to try to get enough unemployment compensation in the hands of the American workers that would come as close as possible to 100% of their income, what they're losing by not being able to work. This additional $600 per week would be for up to 4 months. And they're also adding an additional 13 weeks on top of the normal amount of time that you can get unemployment under a non-coronavirus kind of situation. So again, it's up to the states to adopt these pieces in order to get the backing and the funding from the federal government. So this is really great news. And certainly for our business owners out there and our HR folks that are responsible for communicating some of these things to their employees, because again, I've mentioned many times, employees are really looking to you all to keep them up to date as much as possible. I went out, I'm in PA. I went out on our PA unemployment website, and there are definitely some updated resources and guidance out there. I had received word from my state representative here where I'm at that although unemployment can be applied for online, the PA system isn't exactly ready online to go in and apply for unemployment with regard to coronavirus. So I think they may be working on getting that updated, or they will be sending out some additional guidance. But please take a look at your state unemployment compensation website and see what they have out there, and really check back frequently. All right. All right, let's take a look again, still in Division A. We're going to still be under Title II. Let's look at Subtitle B, rebates and other individual provisions. Now, I wanted to throw this out there because I know this is a question that, you know, the news and the media have been speculating for quite some time. I know a lot of different figures have gone out as far as you know, with the stimulus, how much money is the government going to be mailing everybody? Now that this has passed, we can get the accurate information. So I wanted to throw this in here for you. So these recovery rebates are up to $1,200 for individual filers, $2,400 for joint filers. They're going to add an additional $500 for each child. Now, we'll have to go dig into the rules about what is considered a child in this, as far as age. You know, is it age plus that they're in school, you know, college? There's certainly some things we'll have to dig in to get much more detailed for you. But for now, I want to give you just, you know, kind of a high level overview. This will be available to taxpayers making up to $75,000 for an individual or $150,000 for joint filers, and $112,500 for heads of household. This is how you file your income tax. So you filing single, you filing married, filing joint, you know, all of those kind of things. Now the value is based on your adjusted gross income. If you pull out your tax return that you may have already done for 2019, if you haven't done your 2019 taxes yet, they will look at your 2018. So when you pull those out and look at them, you'll see what your adjusted gross income is to determine what kind of rebate you may be getting. So the question was, what happens if you make more than that? If you make more than 75, or you make more than 150 filing jointly? So what they've come out with is the amount. So we're looking at the, let's say $1,200. The amount is reduced by $5 for every $100 above the $75,000 or $150,000 threshold. So that'll give you an idea. Single filers with income over $99,000 and joint filers with income over $198,000, again, that's adjusted gross income, with no children will not be eligible and will not receive one of these stimulus payments. This is available even if a taxpayer has no income. And as I said, the IRS is going to use your 2019 return. If you have not filed it yet, they will look back to your 2018. Now, at this point, the guidance has stated that these rebates will come out via direct deposit. If you have in the past utilized direct deposit for your traditional federal tax refund, then they'll have that information on file. If you have not done that, the IRS is working quickly to develop a web-based portal so you can go out and provide your banking information. If you haven't used direct deposit previously. Now keep in mind that anytime something like this is occurring, there will be scammers and spammers coming out of the woodwork. This will be no different. Be very, very, very careful with anything you receive via email, because I can tell you as a general rule, 99.9% of the time, the IRS will not email you. They will send you a letter in the mail. I expect this to be no different. So if you receive an email with, hey, go here to give us your bank information so you can get your rebate, I would bet it's a scam. So be very, very careful. As soon as we get guidance on how the IRS will be communicating, we will certainly let you know. We'll post it on social media, because I just know that there will be some scammers out there trying to take advantage of people in this uncertain time. The other interesting piece is rebates will not be counted as taxable income. So at this point, this is not something you'll have to report. Well, you'll probably have to report next year as receiving it when you do your own individual taxes, but it should be of no tax consequence to you. This information regarding the rebates, there's a great news release on irs.gov that I noted here, which is IR-2020-61. It was just released yesterday. That's a great piece to pull out, and as one of your communication touches to your employees, grab this and shoot it out to them, or print it off and hand it out to them, email it to them, whichever. This is probably something your employees have been waiting to find out what the true information was. So this is a great news release out on irs.gov. Something else under Division A, Title II, Subtitle B, retirement provisions. If you are considering taking out a distribution from your retirement plan and you are under 59 and a half, there are additional penalties for what they call premature distributions. So part of this bill is waiving that 10% penalty for premature distributions if it's related to coronavirus, amounts not to exceed 100,000. This would satisfy the hardship provisions. If this is something that your employees are thinking about or questioning, please direct them to your retirement plan specialist to talk through this. This is very new. It will be important that they seek guidance from their retirement plan specialist. In the event that one of these premature distributions is taken and approved as hardship provisions, the repayment due back would be over a 3-year period. And again, for the specific reasons only. If there was no repayment, the amount that would be taxed over a 3-year period. So a little bit of extra assistance to employees out there who may feel like they have no recourse, but to, take some money out of their retirement plan. If you contact your retirement plan specialist, I am sure that they are on top of this new information in the Stimulus Act or the CARES Act, and they may already be preparing emails or documentation to you as business owner that you can then share with your employees. So another great piece of information for one of your next communication touches with your staff. So in Title II, Subtitle C, Business Provisions, there's a segment in here about employee retention credit. This is going to provide eligible employers a refundable credit against their payroll tax liability equal to 50% of the first $10,000 in wages per employee, and that includes the value of health insurance benefits. So this is just further clarifying what that is going to look like. Now, this does include tax-exempt employers, but it does not include governmental entities. Eligible employers must have carried on a trade or business during 2020 and satisfy one of these two tests, which are Test 1, have business operations fully or partially suspended due to orders from a government entity limiting commerce, travel, or group meetings, or experience a year-over-year reduction in gross receipts of at least 50% until gross receipts exceed 80. So this is another way that this stimulus package is trying to help employers out there to offset some of these various costs that they're incurring when we're struggling to actually run our businesses or make income in this trying time. So I think this is probably the second time I've ever really said, the first time was in one of our other webinars. This will be the second time that I'm actually really pleased at the job the government has done with putting together the Families First legislation and the stimulus package. It's so often, at least my perception is so often that, the parties just love to fight each other. And I feel like, well, gosh, when is somebody going to be looking out for your average Joe, the American people? When are we going to have legislators in power who are truly concerned about us, as their constituents? And these two pieces of legislation have really made me feel like they are doing really great things to support all of us. So I'm super pleased with that. A little bit more on the employee retention credit. So for employers with more than 100 full-time employees, credit is only for employees who are not currently providing services for the employer due to coronavirus 19. Effective for wages paid after March 12th, but before January 1st of 2021, and a delay of payroll taxes and 50% of self-employment taxes related to Social Security, railroad retirement, and those types of wages paid during 2020. So this is awesome that employers are going to be able to hold off paying some of the various government taxes and payroll taxes and things for a while until we get our economy back up to snuff. So I think that's great. And these deferred amounts of wages paid during 2020 can be paid over the next 2 years. So the first half wouldn't be due until December 31st of 2020. Second half due December 31st of 2022. So I love to see that they're giving ample time because, it's going to take us a while as a country to get back up and running to full capacity for sure. So these are some great pieces. And certainly, again, I am just kind of disseminating what's in the bill and providing you the pieces that I think are of value to you today. Thursday on our presentation, we're going to dig in a little bit more to some of these areas, but certainly reach out to your tax professional when it comes to, your taxes that you need to pay as an employer for payroll, what some of these credits are going to do, how to address that. I'm sure there are documents that are going to have to be submitted to say, yes, I'm going to take you up on this delay. And these deferred values, much more guidance will need to come out. Your tax professional is going to be key in assisting you here. I'm going to take a pause and check in with Alexandria. Do we have some questions we can look at?
Of course we do. And Angie, you weren't aware, but we were having some troubles with getting some people logged on. So just as an FYI, we will send everybody out a copy of all of the slides, and the recording will be available after we're done, just as a reminder. So the first question is the $600 provision available to anyone who's been laid off, or is it only for furloughed employees? Also, will it be issued on a state-by-state basis?
That's a great question. So the $600 additional amount provision would be available to anyone who would normally seek to apply for unemployment compensation due to a loss of hours. So if you have a reduction of hours and your income has been limited, if you've been laid off, if you've been furloughed and the state that you're in doesn't have specific requirements around paying wages and things during a furlough, then absolutely. Each state has to enact these on a state level. So the stimulus package is talking about if a state enacts these things, that they will get reimbursed by the federal government. So it's the state isn't, going to go under over this, or the employer has to pay in to unemployment. So it's a way to make sure that we're getting this extra money and whatnot out to these people who are in need of it, but not breaking the bank for employers in the state and things. So it's very important that you watch your state's unemployment compensation website for when they get these things enacted on a state level. I have not seen or heard where any states are fussing about this, so I would probably be surprised if a state did that. But yes. So it is on a state-by-state basis. They have to enact it in order to get the backing from the feds.
Okay, thank you. And the next one is, what is the Fed providing if states aren't adding to the additional benefit? Maybe you've already said that, but again.
I don't know that the Fed is really doing anything yet. there's nothing that I've seen that says that a state must do it. Again, it's just the Fed saying we're going to back this financially. If you, Mr. or Mrs. State, adopt it, we will back it financially for you. I've seen almost every state that I've looked at has already enacted the removal of the waiting week and things like that. So I'll throw this out. I know I'm always asking you all what are your questions, but here's a question I'll pose to every one of my listeners today. If you happen to see something on your state that says they are not adopting these provisions, let me know. I would love to know. It's very time consuming for me to research, and as it is, the federal stuff takes up a lot of time. I do research individual states periodically, but it's a challenge to get through every state and see what everybody's doing. So yeah, keep me informed. I would love to know what you're seeing on your state level. Any other questions, Alex?
Talking to myself here. So how do we find out if the state is enacting the additional 600? MA doesn't have it listed yet. Is it too soon?
It's probably too soon. I mean, we're on this past Friday evening. I know my state of Pennsylvania has posted some information out there, but they've not said necessarily that they're going to, do the extra 600 or, do the extra 13 weeks or 4 months or whatever it is they're doing. So just keep checking back periodically to your state's unemployment website to see. What I tend to do if I am waiting for guidance or information on a state level, I'll reach out to my my state representative and say, hey, what are you seeing? So utilize your local and state legislators. They are going to be a wealth of information to you. I know mine has been, which has been awesome. I'm lucky enough that I have his email address. I think my husband has his cell phone number. So, I'm also part of a nonprofit organization that is nationwide that I get a ton of state-based information from. So yeah, keep checking back. Check back a couple times a day. It doesn't hurt, but it's probably a bit too soon. If you think about something like this being enacted, they've got to update their online platforms to be able to accept the new reasoning. All of these different things they have to do. So it does take a little bit of time, and our government offices are not necessarily working in their offices either. So there's going to be a bit of a time delay.
Looks like that's all we've got for right now.
Okay, perfect. So we had one minor correction in the stimulus package. And again, feel free to grab that, HR 748, the CARES Act. If you're like me and you enjoy reading that stuff and trying to disseminate it, but they made some changes to the paid sick leave and FMLA expansion provisions from the Families First Act that just passed recently. So essentially nothing too crazy was changed in here, other than just some, I think, a little bit more clarification or specifics. So first piece would be authority of Office of Management and Budget to exclude certain U.S. government employers and executive branch employees. Not exactly clear on what all that means, although from some of the recent press, which again, take that with a grain of salt, is our government officials who have their own private businesses. I think it's excluding their employees, but again, that's estimation. There's a new rule for rehired employees under eligible employees. So this is key. I know a lot of businesses had no choice but to lay off employees already. So this is expanding the eligible employee definition of the Families First, which is going, because again, we've got to look at work for the last 30 calendar days, but what if you've been laid off for 2 weeks? So if you were laid off by the employer March 1st or later, had worked for the employer for at least 30 days in the last 60 calendar days prior to the layoff, and have been rehired. So that's a really great piece that they added in there. So that is amending the Families First piece with regard to the provisions under that. It's going to allow for advances on anticipated tax credits for employers' paid family leave costs. Provides penalty relief for failure to deposit tax amounts in anticipation of credits allowed. So I think this is another great clarification. Now we're still pending some details and process from the Department of Labor. But again, this is a real concern, because if you've got, we learned in Families First legislation that you can deduct the sick paid wages. You can deduct the wages paid once we hit the FMLA expansion, but what if that puts you in the negative? So, you may be at a point where, well, it's not reducing what I owe to where I get to keep some, but now I'm in the negative. This is a way to be able to get some of those anticipated tax credits in advance, so that you're at least being able to recoup some of these sick and FMLA wages that you're paying out. And then the last thing it did was it clarified the $200 a day has a $10,000 cap on paid leave per employee. So I think they must have had questions, or it wasn't clear enough in the original Families First Act that they did the clarification here. So this is another interesting piece that was amended using the HR 748 CARES Act for health savings accounts and flexible spending accounts for plan years beginning on or before December 31st of 2021. A plan will not fail to be a high deductible health plan when there is no deductible for telehealth and other remote care services. So that's a great piece. A lot of times, to be an HDHP or a high deductible health plan, there are things like telemedicine that may have fallen under your deductible, but there's been so much talk about how some of these various types of benefits can really help us today, and they've done so much regarding telehealth. If you remember in the Families First, they did some great expansion on telehealth or telemedicine for Medicare folks and whatnot. So this is now basically for everybody, that they're going to make the telehealth have a zero deductible and not make you go through your traditional deductible first, but it doesn't void your plan being an HDHP. The CARES Act actually is repealing a piece of the Affordable Care Act, which I thought was very interesting. So the Affordable Care Act had a rule in it that prohibited the use of your HSA or FSA account for over-the-counter medicines. It used to be the only thing you could use your HSA or FSA for are things that you had a prescription for. Back in the day, before the Affordable Care Act, we could do, our Tylenol and our cold medicines and whatnot. So we've had many years where we couldn't use our HSA or FSA. So it's exciting to see that they are now including over-the-counter medical products, including those needed in quarantine and social distancing, no prescription required, and they added menstrual products. That's as much information as I have on that. I am sure that soon we will get some sort of publication that lists out, what do they mean by over-the-counter medical products? Will it include vitamins or things like that? I do not know. At this point, my best guess would be, things like Tylenol or cold medicine and whatnot. But certainly there will be a publication come out. We will share that as soon as we know it. But that's an interesting piece for HSAs and FSAs to now be able to buy over-the-counter medicine, medical products with your FSA. So exciting stuff in the stimulus package, and I really only scratched the surface. A lot of these things would require a much deeper dive, and we will be diving deeper into a lot of these things for Thursday. So I wanted to throw out here, and this is a lot of information, but regarding the loans, eligibility, and uses, this is a great piece, and certainly we'll share the slide deck with you all so you can take this out. But this is an interesting piece on the loans, who's eligible, and how they can be used for the different pieces within the stimulus package. So these are great pieces, and I think it will be great for you to have this in your hand to then be able to disseminate it to your particular business. But I'm not going to go through all of this. It's very detailed. We can dive into it a little bit deeper on Thursday's webinar. Again, we're going to keep holding these Tuesdays and Thursdays at 2:30 p.m. Eastern, and we'll dig into some of these pieces further going forward until we're out of information to provide. But this is an interesting piece on how it breaks out, as far as 2.5 times the average total monthly payroll. What are the requirements to obtain a loan? What do they include in payroll costs? This is some great information for you guys. And then here we've got some info on the loan forgiveness and payment deferral. So remember, we talked about those loans to help our employers stay in business and helping to, pay for their traditional expenses. Some additional guidance here would be businesses that were operating on February 15th or before, going to provide complete payment deferment relief for 6 months to a year. Loan forgiveness provisions would be on payroll, interest payments on mortgages or rent, utility payments. So, if you have to take a loan out to help keep your business going during these uncertain times, these are some big expenses that you would normally have that would be forgiven in these loan provisions. So that's amazing. Forgiveness amounts will be reduced for any employee cuts or reduction in wages. So this is a key point of this as well, that they're doing their level best to help keep your business open while we're all very uncertain, how long is this going to last, and how long is our economy going to suffer. Keep in mind that the goal isn't just for the government to help you as a business owner, but also to help your employees and keep them getting a paycheck as much as possible as well. So I dropped in here, and again, when you get the slide deck, you can dive right on into this, but how that reduction formula works. All right. Alex, I will turn to you. Do we have any questions before I talk about our Q&A?
Well, gosh, I'm sure there are some questions, but for some reason I can't see any of them at the moment.
Oh, okay.
But that's actually a good leeway.
Yeah, let me see if I can see them. Oh gosh, we do have a bunch of questions out here. Okay, let me just tackle these really quick. Let me take a quick peek. Okay, that's published. Have you seen any provisions made for exemptions? We're an employer of less than 50 and it will be very hard to comply. I have not seen anything additional yet, but I will do some digging and see if anybody credible has come out with any additional guidance. I'm assuming we're waiting for the various states or the Department of Labor to come out with a calculator of sort, as well as an application that you can submit to apply for the exemption. Unfortunately, you know, because of the climate we're in, normally things will go very quickly when they need to be popped online, but in the climate we're in, things are taking longer than expected to have guidance on. All right, awesome. So now employees can submit receipts for over-the-counter products and menstrual products. Is there a sunset provision? I have not seen a sunset provision yet for this, nor have I seen the publication yet on what can truly be submitted with regard to these over-the-counter products. So I would not look at reimbursing employees just yet for this. I think we need to give it a few days until we get some clear guidance on what they're allowing to fall under over-the-counter products. Can you provide any guidance for an affidavit or form we should use to certify the reason the employee needs to provide to take a leave for reason 5? I can. I've got a sample template of that because nothing's come out from the government yet for us to use. Nothing has changed yet that I've seen for the traditional WH forms with regard to FMLA. So I can provide you my template for now, what we're using here at Navigate when we administer leaves of absence. I can share that certainly with you all. Okay, so I am excited to announce that we have posted what we call a microsite, and really this is based on a Department of Labor similar Q&A that I was involved in, and I really loved it. But going through it, the DOL was asking for, you know, what types of materials, collateral, presentations, what do you need, employers out there, to help you understand and to be able to give to your employees to help them understand some of these new pieces of legislation. But in this, and I had it open for about a week, if that, and I had over 500 messages because basically anytime someone posts in it, it would send me an automatic email. So I know that people are still having tons of questions, and in lieu of official guidance, and even with official guidance, which sometimes needs translated into layman's terms, I know that the questions are going to keep happening. So what we put together is a microsite where you can come out and real time type in your question. Anytime you type in a question on this microsite, it's going to kick an email back to Alexandria and myself so that we can come in, review your question, and provide the answer right on the platform. The cool thing about the platform then is it ends up being a really cool knowledge base. So you can go back through and do a search to see, has anyone else asked this question? Maybe they already answered it. So I think this will be a really cool tool going forward. This is live today. You can feel free to go out there. Alex is diligently typing in all of the prior questions from our last 4 plus today's webinar questions. So we're getting all of those out there. So we're pre-filling with all the questions you've been so gracious to throw our way. We love that. So please feel free to utilize this. And this is good for whether you're an employer, you're an HR person, you're an employee, you know, whatever your question is around compliance on these new areas due to coronavirus, we want to try to help as much as we can. And again, if it's a question that's outside of, you know, our wheelhouse of expertise, we will do our phone a friend, and we will track down our resources that deal with retirement plans, that deal with flexible spending accounts, or, whatever it is. If we have a resource, we will track that resource down. I've already put all of my friends and colleagues on notice that I know have expertise in certain areas that I will be calling on you to help. So, and if it's something that I have no resource for, I will flat out say that, just so that we've done everything we can to assist you. And get you the answers that you need. So take a look, navigatehcr.answerbase.com. Super exciting. This is what it looks like for when you come out here. As you can see, we've already got some questions that Alex has been diligently typing in for me. And it's really simple. Ask your question here. When I reply to your question and give you an answer, you'll get an automatic email to let you know that the answer is out there. So I hope that you take advantage of this platform, and that you certainly search around in it for questions we've already posted out here. This tool is completely free, designed for you all. If all I can give during this time of uncertainty is my intellectual capital or my expertise on an area, or my resources who are experts in other areas, then I am thrilled to be able to give that. So please dive in, utilize this. We're going to keep building it out day by day by day.
And all of these links will be in the thank you email, as well as the copy of the slideshow and the recording for all of you guys to have.
Awesome. And I think, as always, don't forget, follow us on social media. We do have a monthly podcast. You are going to get quicker information usually. We're only doing these webinars right now twice a week, but we are posting new things on social media all the time. And again, our goal is to help give you some clarity wherever we can. We always appreciate your attendance on these. We utilize the questions that you ask to provide content and a deeper dive on future presentations. So we're super excited to help you, and hope you enjoy our new microsite for the live Q&A. It's in real time, and we will do our best to answer your questions out there as quickly as possible. And again, Alex will be back filling our prior question and answers from our webinar. So as always, thank you so very, very much. We appreciate you. We're happy to be here to support you in whatever way we can, and look forward to bringing you more content and more information as it becomes available. So thank you so very much for attending. Be safe out there, and we'll talk to you soon.
Thanks, everybody.